Good afternoon, everybody. This is going to be our Summary Markets episode 115. I do apologize for this video being pretty late. I have been trying to get these videos out around lunchtime, so this one's going to be about 5 hours late. I do apologize. As you guys can hear, it is due to my new audio setup. So I've been working on getting the Shure SM7B with the GoXLR equalizer set up, and so far I think I have it to a point where it sounds pretty good. Let me know in the comments below what you guys think about the new audio setup. If you guys are familiar with this mic or the equalizer and you have some recommendations, please let me know in the comments. But all right, let's get started. So starting off with the ES, we had a brutal week last week, closing the month of April with a nasty monthly close. Let's take a look at that candle. This candle was damn near engulfing the past 2 months with the entire bodies and the lows included. So the momentum was pretty damn weak, and this is actually very bad because April is historically the best month of the year, if not the second best month of the year. Sometimes November is the best month, so they kind of trade off. But obviously this year, April is not going to be the best month of the year. So far, it has actually been the worst month of the year, and it's closing out with a minus almost 9% sell-off on the ES. So going back to the daily here, we can see that that inverse head and shoulders that we were looking at is kind of invalidated. If we go back and take a look at the shoulder line, so this would be the shoulder line, then we have the head, then we had the retest of the shoulder line. It is invalidating this with that sell-off below the shoulder line. So now our best case scenario is not the inverse head and shoulders, it is actually the bulldog. So this is kind of your last hope, is the bottom here, curved back, double bottom, and then push away from this and put in a head either around the 200 EMA or put in a head somewhere around the top of the back. So that is really the only boldest scenario that we could play out here, which means we're bouncing. If we go lower, it would be the 4,000 gap fill. So we're still waiting on that 4,000 gap to be filled. We did fill that local gap. If you guys were scalping with me this week, we had some great trades knowing that we had that 41 gap still below us. So we had the gap get formed on the 26th. It tried to push up, a little bit of chop, tried to push up again, and then we had that topping pattern with those strong sellers around 42.91. And we actually shorted that move, but sadly, because we are scalping, we got out for the crumbs, as we say, but we did not go for the entire pie. So that move was pretty damn juicy. If you did sell the 42.90 all the way down to 41.41, it gave you a, 150 points from the top to the bottom. So pretty damn nice. We did fill the gap, as I said, right on the close. We came back to retest it and showed a little bit of sell pressure, but then the session closed. So we don't really know how it's going to react until we see that 6 o'clock open, which is at this point about 2 hours away. So when that 6 p.m. Open does show up, we do want to see how price reacts to this 41.41. If we start seeing some sell pressure immediately on this level, then it is most likely going to come down and fill that 4,000 gap. Probably not next week. That'd be pretty brutal. I mean, we really could. We're seeing negative 100 point days pretty consistently. So we very well could fill it next week if we just go straight down. But I would like to see some kind of buy pressure, some kind of chop on the next week. But the sooner we fill the gap, the sooner we can go up, right? So if we can fill that 4,000 gap and then start pushing off that gap to the upside, back into 40.50, back into 4,100, then we could say that is a pretty strong local bottom, and we could start to take some kind of longer term calls on SPY, maybe some 30 point out of the money, 20 point out of the money, kind of far away, you know what I mean? Like 3 to 6 months out, far OTM calls. That would be a potential setup. Obviously, it'd be kind of like a lotto play, but that is something we are going to look for if that 4,000 gap is filled and some buy pressure comes in after it being filled. Okay, so let's take a look at some actual levels going into next week. I know you guys want to see kind of where our volume profile levels are, so let's take a look. We're going to hide these other indicators for now. So looking at Monday, what we want to see is we want to see buy pressure holding above this liquidity right here, which is almost exactly at the gap. It's a little bit higher, 41.43. There's a little bit of liquidity around the 69 level, and there's some liquidity around 42.05. And that goes all the way up to the value area high, which is 42.23. And then down below, we have the value area low at 41.18. So basically, when we see that 6 p.m. session open up in about 2 hours, we want to see how it reacts to this level here and this level here. If it starts to find value below this 41.18, then most likely it is going to be a continued sell-off for the rest of the week into that 4,000 gap fill. If we start to show buy pressure above the liquidity here, we want to look for that 41.69 liquidity. And then if we start to find buy pressure above that, we want to push all the way up to the value area high. Let's take a look at Nasdaq. Nasdaq on the daily is basically the same story as ES, so we're just going to go straight to the 30-minute here. It's a little bit different because we are outside the value area on Nasdaq, but we do have very similar liquidity levels to watch moving forward. Okay, so what we want to see here on Nasdaq when it opens up in about 2 hours is we want to see how does price react to the session low on Friday, that 12832, and how does it react to the liquidity at 12917. If you hold above this liquidity here, we want to look for the value area low around 13070 and then 148, okay? If it starts to hold below this level here, that's where we have to kind of pull up a daily and see where we're going. So let's zoom out a little bit here. Let's pull back the visible range and let's find some levels below our current price. So we do have a value area low level somewhere around 359, which is also a liquidity level right below that. So if you want to mark out kind of the low of the liquidity, you can do that as well, which is around 187. And then to the upside, let's just go ahead and mark out this major liquidity right there. And then the POC right here. Okay, let's go back to the 30-minute here. So looking at our longer term levels, we can basically see that if we start to hold below 128, we are most likely going to push down into the 359 or 187 area way down here, which is probably about 3 to 5%. Let's see. Yeah, it's about 4% to the first level and then about 5.5% to the second level, which could be a pretty bloody week. But as we've been seeing days, not weeks, we've been seeing days have minus 100 to 200 points. So this is a very brutal market that we're in. So you have to kind of have those extended targets that are kind of far away, where you think they're far away, just in case we have this current volatility continue. Okay. All right, let's move on to Bitcoin here. Let's get rid of our levels because we did play out our bearish levels here. So let's go ahead and delete this, and we're going to find some new levels. So mostly, you're looking for the current low, or excuse me, the accumulation low right here. And then you're looking for the lows of these wicks. These wicks have not been retested. Okay, so this is kind of like a liquidity area that is resting on these lows. These lows have not been tested, and these wicks have not been tested. So if we are coming down and we're looking for liquidity, if we're a big seller, we want to sweep these levels. So we're pretty much sweeping the first level now, but we're just not there yet. Maybe one more sell-off, one nasty wick down to like 36 or maybe even 37.5, somewhere around there. Excuse me, 36.5. That would be a sweep of this level. Then we would have to wait for kind of a trend break, a sweep back to the upside, and then a trend break of this level here. And then we could be slightly bullish moving into the 40,000 or even the 43.8 200 EMA. Okay, if we want to take a look at volume profile levels, let's go ahead and grab the volume profile of this entire accumulation. So the reason I chose to grab it from like right here is that's where this accumulation started to fail. So this is the start of this new accumulation. Okay, that's why I grabbed my volume profile starting there. But okay, let's mark out some levels here. We have the value area high there. We're actually on the value area low now. And then we have the POC just above us. So if we zoom in here, we can kind of see what's going on. We're hanging out on the value area low. We're trying to find some buy pressure, but we're kind of stuck below the POC. So there are a lot of sellers around this 39 to 40,000 area on the accumulation. Okay, so until we start to hold above this 39,000, this is very bearish, leaning into the low of the tail here, which once again goes to those liquidity wicks. Okay, so if we start to lose kind of the high volume node, which is that value being found outside the value area low, then we are most likely going to go and sweep the lower liquidity wicks around 34,000 and 32.8. So don't be bullish until 39,000 is holding as support. Okay. Moving on to Ethereum, we can do the same thing here. So let's grab the volume profile of the accumulation. We're going to take a look at our POC here, our value area low, which also lines up with a liquidity zone. Notice how there is kind of an imbalance right here. There's value being found outside the value area low, so that would be a small imbalance. And then we have kind of a gap right here. So there's a little bit of liquidity resting below the value area low. In this case, we are actually holding above the POC. So slightly, I wouldn't say bullish, but there is slightly a small amount of buy pressure around 2620 to 2600. So if we do push down into that level, there could be some buyers to protect that low. But if we zoom out, there is resting liquidity right here because this has not been tested. Same thing here. This has not been tested, and this has not been tested. This is more prominent because we have kind of an accumulation, kind of like a value being found there. So there is a lot of liquidity resting below that level, which you can kind of see on the volume profile. What that means is, if I was a big buyer, I know that there's resting liquidity here, so I'm not going to try to buy the accumulation. I'm going to buy the sweep. So if the seller pushes it below that level and we get that nice little sweeping candle, that's because the buyers are stepping in to protect that level. If it doesn't wick and it stays below that level, that just tells you that there was not, excuse me, I can't talk. Let me restart that sentence. If we push down and it doesn't show a wick, that tells you that there's not enough buyers to protect that level and the sellers are actually in full control. Okay, and if you don't see a wick there, it is most likely going to continue lower back to the wicks that have not been tested. Okay, the reason we saw wicks here was exactly what we just said. The liquidity zones were being tested, but the buyers were protecting that level. Okay, so we want to see a wick here. If not, it's most likely going to continue very strongly to those lower wicks. All right. So no wick below 25. You want to be a seller into around 22 to 21. All right, let's move on to, actually, I want to cover Crow here on the summary markets because Crow has been selling off pretty hard and we are holding a lot of Crow long term. So if you guys are in the Discord, I said that I was going to hedge my Crow below 40 cents, and that's exactly what we did. Let me actually grab a screenshot for you guys. So this was our Crow short. You can't really see it in the screenshot, but we shorted around 39, and then we just covered it around 29. So basically right where it is now, we took our profit on our hedge. So we were hedging our Crow spot that we have staked for our rewards, and we took a little profit here on that short, or we took all the profit, I guess. We closed the position entirely. I am looking for another hedge. Let's go to the 30-minute here. If we come back and retest this little inefficiency zone around 34. So you can see that there's basically no value in this zone right here because the sellers were far too aggressive. The sellers were pushing this so quickly that they did not give the buyers an opportunity to see if that was a fair price. So if we do come all the way back to retest that kind of inefficiency zone, anywhere from 33 up to 35, this is a potential short. So we are going to look for another hedge around this area if we can find some sell pressure, okay? In the meantime, I am not hedged. We are just holding spot. But if we start to show more value below 29, I will begin to hedge all the way down to... Actually, I have to go to another chart here. Where is... I think it's the perp chart. Here it is. The perp chart has more data. So where we're looking to hedge, if we find more value below today's candle, you want to watch the original breakout point. This is a very common crypto chart where we have this massive exaggerated move up, then it gets too toppy, pulls back, and you start to see this long accumulation. Basically, if this accumulation fails, where it's looking to go is the breakout point, the origin, the point of origin. So the point of origin in this case would be anywhere from like 18 to 23 cents. So if we continue to find value kind of below these lows, which is anywhere around 33 to 34, kind of where we were looking to hedge, then we are most likely going to come all the way down to that 20 cent point of origin. Okay, so that is a big potential there. Let me see, how much of a move would that be? That's another 25 to 30% to the downside. So we could definitely make another little short trade in the meantime if we start pushing down there. Okay, last but not least, let's go over some big tech levels. I know most of our levels were hit because of the earnings. So let's go ahead and clean these charts up. We're going to go over the original chart, then we'll go over some new levels. So Microsoft, we had our bearish trigger around 283, and we hit our targets around 278 and our target around 269. Our 269 was hit on this candle over here, which was the earnings candle. But it looks like we could come back to retest that level pretty soon. So if we break below 269, look for 260 and then 251. If it continues to hold back above these levels, which we're going to have to make newer ones, let's go ahead and mark these out again. So it looks like our bullish trigger would be somewhere around 285. And then we have a small target around 289. And then the overall target would be the gap fill around 297. Okay. Moving on to Apple here. We actually have to find some new levels on Apple because we hit pretty much all of our levels. Let's go ahead and delete this. We're going to grab a volume profile of this lower section here. Gives us a target around 155 and then a session low around 150. That would basically be as long as it holds below 156.75. And then to the upside, let's go ahead and grab another profile for this down move. We have a nice volume node right here on the POC. We have kind of a liquidity area right here. And then we have a value area high right here. By the way, let me know with the new mic if you guys can hear my mouse clicking and my keyboard a lot. I'll try to increase the noise gate to fix that problem. But all right, with Apple, it looks like if we can hold above The 162.50 area, you're looking for 167 and 169. If we hold below 156, you're looking for the low around 154 and then 150. Facebook bottomed on our liquidity level around 173, which was also obviously because earnings. Earnings had a nice move up, pushing into the value area low at 207.50, almost to the tick. You kind of swept it a little bit, but on April 28th, you almost tested that level perfectly. So we are seeing a little bit of a failure here. Let's go ahead and get rid of some of these levels in the middle. Okay, so what it looks like is if we hold below 190, there's kind of a liquidity level right there. You're looking for that gap fill at 175. If it continues to hold above 208, which is that kind of top of last week, you're looking for 223 and 232, which is the value area high and the POC of this session right here. Okay, moving on to Netflix. I think I had some pivots down here. Let's take a look. Yeah, so this is actually that level that I gave you guys last week, almost to the dollar, 184.80. It bottomed at 185.60, so about $1 above that level. If you start failing below this level, you're really not looking at major support. Let me pull up the visible range. You're not looking at major support until 143. You see this volume node right here? That is the next major support below the current price. And then we don't have support really until 95. We don't want to talk about that though, because that would be another 50% sell-off on Netflix. Okay, so it's either bottom here or start to sell off towards the 150s. Maybe a little bit of liquidity around 170, but not much. To be honest, I'm not interested in Netflix here. You do have some gaps above you, which Netflix fills every single gap, historically speaking, but we have left a few gaps open since this sell-off began. Okay. All right, moving on to Amazon. We basically blew through all of our supports. We had supports around 29.50, supports around 28.70 and 28.20. And then even the 200 EMA at 25.93 completely demolished. So let's go ahead and delete these. Let's take a look at the visible range again. So we do have some support kind of right below where price is now, around that 23.90 area. Lots of liquidity around that 2200. And then we have major support down here in the 1800s, which we don't really want to talk about because that would be a massive sell-off. Let's see, that would be a 28% sell-off. So hopefully we don't have to mention that level anytime soon. But all right, if we don't bounce off this 2400, look for 2200. If it gets back above the 200 EMA, you're looking for a rebound into these lows. So anywhere from 2730 up to 29.20. But to be honest, I am not interested in any of these big tech companies this week. We are going to continue to scalp ES. I'm just giving you these levels for you guys that love trading big tech. Okay, moving on to Tesla. We do want to see Tesla hold back above the 200 EMA. There's a ton of liquidity around 970 and 950, but we would have to hold above the 200 EMA back above 915. If it does not hold back above the 200 EMA and you start to sell off below 850, we are looking for a sweep of that low, which is 820. Okay? If you lose 820, you're looking for a sweep of 750 with small liquidity at 780. All right? We do have a daily bearish pinch happening. So the Momo, when the trend line lines up with a histogram like this, typically the direction they are headed is the direction you want to follow. It has a very high strike rate. I'd say easily over 80 to 90%. It's pretty rare, but when the pinches happen, they are very accurate. So basically this is telling you that as long as that pinch is still happening to the downside, you want to be a bear on Tesla, not a bull. But all right, guys, that is it for the summary markets. Sorry, it was kind of a little sloppy this week. I was a little distracted by the new audio setup. I will try to have next week's video out on time. So next summary of markets for next Sunday should be out around 12 o'clock, which is around lunchtime. So be on the lookout for that. The stream schedule for this week will be a little different. I have noticed that you guys enjoy my ES scalping live streams. So what we're going to do this week is as follows. Monday through Friday, every single day, we are going to stream at 9:30 in the morning to about 10:30. So the first hour of the cash session, we will be streaming ES. We will be calling out scalps and looking for some short-term trades. On Friday, we will also have a 3 p.m. Eastern stream just to show the final hour of the week. Okay, so no power hour stream except for Friday, and then every day, Monday through Friday, we will have a 9:30 to 10:30 morning stream. So I will see you guys tomorrow at 9:30 in the morning. See you guys later.